All right, y'all, happy Saturday, August 23rd. Welcome back. Hope you guys are having a good weekend. Let me get my stream screen set up here so I can see your chats. We are going to be covering today a live practice quiz, practice exam. It'll be a shortened version on the topic of annuities, insurance, and suitability of those products for clients. Just to recap, I took the SIE exam maybe a year ago. I passed that. That is kind of like an introductory exam. I'm taking the Series 65 also just for fun. I'm an investor. I don't work in the industry. And but you could use the Series 65 if you want at some point to become a registered investment advisor for a fee. You could use it for that. If you're thinking about taking the Series 65 or that interests you going down that career path, might be an exam you want to check out. You do not need to be registered with FINRA or sponsored by anybody to take the SIE or the Series 65. They are the two that you can take as an individual. You don't need to be working in the industry nor sponsored. And great tools to improve your overall knowledge as an investor. What we have up on the screen here is Achievable, which is the website that I use for test prep. And there is a link down in the video description if you like what you see here. I'm not going to go through the whole textbook. I've already done some videos on my test prep for annuities and insurance. What we're going to do is take a practice exam, and I'm going to do it live here with you, and we'll see how I do. Let me get my cursor back here. Here we go. All right, so on the exam, these are our four main categories: economic factors and business info, investment vehicle characteristics, think stocks, options, and insurance and annuities will come into play as well. Client investment recommendations and strategies. And then I think for me, what is going to be the hardest is the memorization of and recall of laws, regulations, and guidelines, just because there is so much memorization. And as a trader, you know, we're familiar with equities and options. We're not out there memorizing every law and regulation out there that governs giving out investment advice. So more on that in the coming days. Today, we're going to hone in on one area that I've had to spend more time than I would like to studying, which is the insurance and annuities. And why do I say more time than I'd like to? Well, you can go to the NASA website, NASAA, and look up the tests, and you can look up the test specs, which include, you know, for each one of these categories, how many questions would we expect to see. And for insurance and annuities, only 2 questions on average. So am I spending an inordinate amount of time studying for this? I like to, you know, that is a debatable question. Some tutors will tell you just memorize the basics, and if you miss 2 questions, it's not the end of the world. But we're looking for about a 70-71% minimum to pass the test, the official test. And, you know, I spend a little bit less time studying on things that I already have well understood. I'm not an insurance salesman, don't plan to become one, but there are 2 questions, and I'd like to at least have a chance of getting both of those right. So that is why I spent a little bit of extra time studying on these 2 topics. Not something I'm super familiar with prior to prepping for this exam. And so with that being said, let's go ahead and line up the test here. You can see there are longer checkpoint and midterm and final exams, and then a full Series 65, 130 question, 3-hour exam. We're not quite to that point yet. We're just going to do a quiz down here on insurance. It says that there are 90 questions in the test bank on Achievable. The quiz should be 10 questions. And we're not going to time ourselves here, although I think I should be able to answer these in under a minute each. A minute and a half would be kind of like the maximum that we want to devote to a question, unless you get to the end of your exam, and then you can go back and retake the ones that you skipped. So feel free to answer along, throw out questions, throw out guesses. I'll be talking aloud as I take this, just to kind of re-emphasize my memorization and analysis of the questions. There will be some very tricky ones in here, and there will be some basic ones. When you get the exam, you know, NASA, or FINRA, whoever you want to say is administering it, has thousands and thousands of questions in the test bank. You don't know what you're going to get. Every person's exam is different. But we should expect about 2 questions. Yeah, maybe you get easy ones, maybe you get 2 hard ones on this topic. We will find out. Well, we won't find out today, but let's run through the quiz and see how I do. The first time that I took this a couple days ago, I got 55% after reading the textbook and trying to memorize it. But all of these products, annuities and insurance, are very similar in many ways, but they all have slight differences, and that is a lot of categorization to memorize. What are the specifics of each product, and then how do they vary? And those questions can be difficult. So since I did so bad on the first practice quiz, I spent a little bit of extra time. Let's see how I do today. I'd be happy with a 80% or above, but I'm really shooting for 90 or 100% today. Let's see how it goes. Feel free to ask questions along the way. All right, we're going to have 10 questions on this quiz. It says number 1 there, hard question. All right, let's see what we got. An investor is considering the purchase of universal life insurance. Universal, we think of the word flexible in many ways, which in it we have universal and universal variable, or variable universal. We are talking here about regular universal. That is important because of understanding the differences between regular universal and variable. Which of the following statements regarding this type of insurance product are correct? The cash value may be withdrawn or borrowed. That is correct for universal life and variable universal. We're looking for correct answers, and looks like we got several options at the bottom, including all of the above. So let's go through them one by one. Number 1 looks to be true. Cash value deposits may be increased with additional premium payments. I believe that also to be true. Universal life insurance is flexible, giving you the flexibility to increase your payments, your contributions to the insurance. Premiums are invested in the separate account. That would not be true for Universal. Universal is going to have premiums credited to the insurance company's general account. A variable Universal would have a separate account. So number 3 is not true. And then the last one, cash value is likely to be kept by the insurance company if the policyholder dies. I believe that to be true also. There's always one that you can't quite remember with certainty, but I think that one is true. So I'm looking for 1, 2, and 4 as my answer. Let's see if that is correct. The other one would be 1 and 2, but I'm going to go with 1, 2, and 4. All right, I was correct in my little bit of gray area of memory on number 4. Question number 2, a customer signs up for a life annuity. Now we're talking annuity, not insurance, with a 15-year period certain. Life annuity means you get the annuity for life until you die, but 15-year period certain means even if you die less than 15 years, your beneficiary well, let me not say something incorrect. Let's just read the question. A customer signs up for a life annuity with a 15-year period certain. The customer lives for 12 years. What is the total amount of time annuity payments will be made during the distribution phase? All right, when we have a period certain, that guarantees the amount of time that the payments are made. So even though the customer lived for 12 years, it should be 15 years. Yep. Let's see the explanation on this. Yeah, this is what I was going to say, but I didn't want to misspeak. The beneficiary will receive payments until the period certain time is met. All right. Pretty straightforward on that one. Number 3, which of the following best describes the death benefit on a variable annuity? We know that death benefits are something that are paid during the accumulation phase, not the distribution phase. So that is the first thing that comes to mind. Let's see what the question, what the answers are. Oh, also the death benefit will be the greater of the account value or the basis. Since it's variable, the account value and the basis of contributions might be different. So we're kind of thinking about those as we look at the answers, those two things. The remaining unpaid balance is paid to the beneficiary if the account owner dies during the distribution phase. No, it's during the accumulation phase for a death benefit. The greater of the account value or basis is paid to the beneficiary if a death occurs in the accumulation phase. That is correct. The lesser of the account value or basis is paid to the beneficiary. No, it's the greater. And the last one, it says a predetermined death benefit is paid to the beneficiary if the account owner dies during the distribution phase. It is not a predetermined. It's the greater of the account value or basis during accumulation. All right, got that one right. All of the following are associated with term life insurance, except, remember, term life insurance is the cheapest insurance you can get. It's good for a certain term, 10, 15, 20 years, whatever you pick. And once that term is over, the policy's done. It doesn't have any cash value like a whole life insurance or a universal life. So what is true and what is not? We're looking for the not. It lapses after a specific time period. That is true. If you have a 20-year term, once 20 years is done, the policy will lapse. Is it cheap? Yes, that is true. It's the least expensive of the insurance options. Does it have a guaranteed death benefit? Yes, the amount of your policy. And does it have cash value? No, that one is not true. And that is not true for term life insurance. It is true for the other types of insurance. So we're going to say cash value is not associated with term life insurance. All right, got that one right. Moving on to number 5. Which of the following statements regarding a variable annuity are true? Achievable has marked this as a hard question, so let's read that again slowly. Which of the following statements regarding a variable annuity are true? We got annuity and insurance. We're thinking in the annuity bucket right here. And we're thinking about the differences between fixed and variable annuities. So let's see what they throw at us down here below. The insurance company assumes market risk. That is not true with the variable annuity. Fixed annuity, the insurance company assumes the risk because they're guaranteeing you a return. A variable annuity, you're electing where to invest your money during the accumulation. So you have the risk. So this one is not true. Let's keep looking for the one that's true. Annuity units are fixed. I believe that one is true. Your accumulation units can vary, but then once you annuitize it, it should be fixed. So that is a possible answer. Accumulation units are fixed. No, because you're contributing over time and the accumulation units will increase and the value of them will vary depending on the investment. The death benefit exists during the annuity phase. That is not correct. Death benefit only exists during the accumulation phase. So we're going with the one that we said was true. The others we have excluded as a safety. I always check them all just as a sanity check, safety check for myself. And let's see. Yep, that one is correct. Let's move on to number 6. Which of the following statements best describes the high watermark crediting method of an equity indexed annuity? All right, this is a more, we had the fixed and the variable annuities, and then we had another section in annuities called equity indexed annuities, annuities that are indexed to an equity, like the S&P 500. And once a year, you measure how that index performed to determine the benefit to your account. And there are various ways: annual, point to point, high watermark, low watermark, various ways to measure how that index performed. So what it is asking us, how well do we know the definition of a high watermark and how it works? Which of the following best describes the high watermark crediting method? All right, let's read the possible answers. It is a comparison of the lowest index value to the ending value. And that is not true. High watermark, you're looking for high, but that might be more applicable to a low watermark. I'm not even going to think past, I see the word lowest, I know it's not talking about high watermark. And so we can also exclude this other one in the bottom right. So let's look at the ones that say highest. It comparison of the highest index value to the ending value over the specified period, or comparison of the highest index value to the beginning value over the specified period. Crap, which one of these is it? The beginning value or the ending value of the period? I think it is compared to the ending value of the period. Oh, we missed one, guys. It's the highest index value to the beginning value. This is why we do the exams, to see what we did not remember. All right, we got one wrong so far. An investor is considering placing assets into a variable annuity. During their initial research into this product, a variable annuity, they become concerned with the ability to provide for their family should they pass away unexpectedly. Which of the following ensures a payout to a beneficiary if the investor dies during the accumulation phase? We know that a death benefit pays the beneficiary during the accumulation phase. So that is the answer I'm looking for. That is just a memory thing. And I will select that answer. That is correct. Moving on to number 8. All of the following are associated with term life insurance except, did we already have a question on this? I feel like we already had one on term life insurance. It lapses after a specific period of time. It's cheap. Does not have a cash value. Whole, variable, and universal have a cash value. Term does not. All right, we got that one right. Let's move on to number 9. The last 2 questions here. An investor contributes to a variable annuity which is offered and maintained at their preferred insurance company. Variable annuity, not insurance. We're thinking in the annuity bucket. They currently contribute a fixed premium monthly and plan to continue contributing until retirement. What statement is true? And we can have multiple statements here, looking at the answers down below. It is variable. So remember, when we think of annuities, we want to think of the buckets, variable and fixed. What are the differences? Variable means that your account, the performance of your investment is going to go up and down. It subjects you, the investor, the account owner of the annuity, to market risk, not the insurance company. And those contributions are made to a separate account, not the insurance company's general account. Those are all things that are common to variable. So let's look at the answers and keeping that in mind, see what we got here. The investor is subject to market risk. True. The insurance company is subject to market risk. Not true. That would be a fixed annuity. The investor is subject to mortality risk. That is not true, because the insurance company is the one that bears mortality risk, if you ever get a question on that. And number 4, the insurance company is subject to mortality. Well, there you go. So what is true? 1 and 4. The investor is subject to market risk because it's a variable annuity, and the insurance company is subject to mortality risk. That has to do with paying out a death benefit during the accumulation phase. So we're going to go with 1 and 4. That would be this one down here. And that is correct. Last question, moving on. All of the following are associated with term life insurance except, another question on life insurance, but we got some different choices down here in the answers. All of the following, we're looking for the one that is not true. It has a guaranteed death benefit. It's not a security. That is true. It's not variable, so it's not a security. It has a guaranteed death benefit. It has no cash value. You can't take out or borrow cash during the policy like you could with a whole or a universal. And does it have variable premiums? No. Term life insurance would be a fixed premium product. So that one is not correct. And that is the correct choice on number 10. Total score, 90%. I would have preferred to get 100, but you know, that's why we study, and that's why we keep doing quizzes and then chapter exams and then section exams and then final exams and then the full 3-hour practice exam. So I don't know if I'll do any of these other ones online because they're, live with you guys because they're so long, but I will keep you posted on the results. And that's probably going to wrap it up for my any comments or videos or live streams talking about insurance for the time being, because I need to move on to the next topic in my textbook. I do have the slide decks that I prepared kind of like as my study guides in addition to the textbook here on Achievable. Those videos are out on my channel. There's one for annuities. There's another one for insurance and suitability. We didn't have any suitability questions today, but you know, maybe go take those. Go take a look at those if you're looking for some extra resources. If you're studying for the 65, 66, Series 6, Series 7, there's going to be a lot of commonality on the annuities and insurance questions, and maybe that'll help you. Shut up, Siri. So, thank you guys for watching. Thanks for hanging out. And if you're watching this on replay, feel free to drop me a comment or a question down below, and we will see you with some additional videos if I come across another topic that I think is problematic for me, or maybe might be for you, and it is worth a little bit of extra discussion. We'll have some more videos and live streams talking about the FINRA, NASA exams. And if you're studying for these, I feel your pain. They're not easy. Just keep on reading, keep on taking quizzes, get an online tool like Achievable. Don't just try and do it with a book that's got one quiz and one or two tests in the back. The power of a web-based tool like Achievable is the infinite, almost infinite amount of quizzes and exams that you can take. The community where you can ask questions. They've got a AI bot in here which you can ask questions to as well. And they even have cheat sheets which you can print out and memorize. They call it a dump sheet. And you know, you can use those as a study guide too. General formulas. You can't take these in the exam with you, but you can memorize them and have a partner, spouse, friend quiz you on them. General formulas, products, state laws and regulations, federal laws. A lot of memorization. Pass one of these tests. Joshua 11, he says, the best question is, who is the beneficiary for Jeffrey Epstein? Yeah, we didn't really hear the answer to that, did we, Jeffrey? I mean, Jeffrey, Joshua. I wonder who was the beneficiary of all of his investments. If anybody. I don't know. Did his estate get sued? Maybe it all went to people that are suing him. At any rate, thanks for hanging out. We'll have some more live streams on other market stuff this weekend. So if you're new here, always feel free to come in and ask questions about anything, including the FINRA exams. If we're talking about markets or trading or the wheel strategy or economics, the Fed, crypto, any question is valid during any live stream. There's no hard and fast rules. So hope to see you on that. Hit the subscribe button. Make sure and select that bell notification so you know when I'm coming live in the future. If you missed this one and you're watching it on a replay, set that alert. Thank you for watching. Enjoy your weekend, and we'll see you on the next one, guys.